let's talk about, should you buy, rent, or lease houses, cars, all kind of things that you might be looking to buy. It's a common question. Most people answer it incorrectly. I'm taking the Maserati down. It's Mother's Day, but my mom's out of town, so I'm going to visit my grandma. She kind of raised me as a mother, or as a second mother, so headed to San Diego. Got someone else filming. Got my two hands to drive. First thing you want to know about renting, buying, or leasing is that anybody who tells you an absolute answer is wrong. Okay? I know that sounds ironic that I'm being absolute, but it's true. It's always a case-by-case basis, and I'll explain why. Sometimes you want to rent a car. Sometimes you should buy it, purchase it outright. Sometimes you should lease it, and it depends on several factors. So sometimes it depends on, obviously, tax jurisdiction, what country you live in, what state you live in, even sometimes, because there's city tax, what city that you live in. The second factor is cash flow. The third factor is something called opportunity cost. What's the best use of your capital? So sometimes you would want to rent or lease because it'll give you extra cash flow to invest in other things that have a higher ROI. So it's just the number one thing. Anybody who tells you an absolute answer, always buy real estate, they're morons. And I was lucky to run into mentors that had an advanced mindset. They realize that it's a case-by-case situation. They realize that it's not always one way. So that's very, very important. The second thing is that you need to know is that, and I'll talk a little bit further, is this principle of opportunity cost. Now, that's a simple term, opportunity cost. I call it highest use of capital. Every person, and the nature of money is that it's limited. There's not one person in the world that has unlimited capital. Even, last weekend I went to hang out and went to the Berkshire Hathaway meeting. Warren Buffett and Bill Gates and all those guys were there. They still have a finite supply of capital. So you always have to be asking yourself, what's the best use of my cash? And if the best use of your cash, let's say, is growing your entrepreneurial enterprise, your business, and you need marketing money for that. Let's say you want to invest $5,000 a month or $1,000 a month or $100,000 a month in marketing, and you're also looking at needing a place to live. So you've got a residence. Well, a lot of people tell you should buy the home. Well, it depends. What if homes in that area and your projections on that piece of real estate are that it's going to appreciate by 6 to 10%? But if you took that same capital and reinvested it in marketing your business, you'll get 1,000% ROI. Then you're a fool to buy real estate, because you can make 1,000% here versus 10% here. So that's why I said it's always case by case. Now, there are times though where you don't have a higher use of the capital. You don't have anything you could invest the money in. Maybe you're not an entrepreneur in the stock market. You only project it's going to make you 8%. But by buying a home, you project that your ROI on the down payment and the cash that you put into it is going to give you 10%. Then you're better off to buy. That's why I said this is a more sophisticated talk that I'm having with you. It's a more advanced talk than most people are willing to have with themselves. And and the third thing is taxes. You need to talk to a CPA, and that's not something I can give you advice. I talk to my CPAs and I go, okay, want to get a car, or we want to get because I have, I've done all of them. I've bought, I've leased, I've rented cars, and I mean, you don't really rent cars, but when I go to an airport or something like that, I rent. Sometimes people think I rent my cars, but I don't. But I will buy them versus lease them, just depending on, and then sometimes when it comes to the cars specifically, they'll give you lease specials versus purchasing specials. In California, for example, when you lease, you don't have to pay sales tax. So there's some advantages. It depends how long you want to keep the property. So that, I'm gonna give you a bonus one. So number 3 is depending on taxes. Number 4 depends on your how long you're gonna be in the property or in the car. So that's the bonus point. Depends on your location and your travel and your schedule in terms of moving. So you move, let's say you go to New York City and you're only going to be there for 6 months on a special assignment. Well, that's probably where you want to rent or lease. If you know you're going to be there for 30 years, then ownership becomes generally more more viable. Same with cars. You usually buy, but if you think you're only going to be in a car for 1 or 2 years, you like new cars, you want to swap them, or you want to run them through your business, going back to the tax question, then oftentimes you'll lease. So you need smart advisors around you. Don't listen to the people that try to give absolute answers. As the wise billionaire Charlie Munger says, avoid extreme ideologies. Extreme ideologies are like, oh, real estate always will make you money, man. Just invest in real estate and you'll be rich. There's plenty of people who go broke investing in real estate, and there's plenty of people who get rich in real estate. The difference is understanding these other subtle indirect factors. When you understand these factors, you get way ahead. Well, I hope you'll get ahead, and I hope you have a good Mother's Day tomorrow. And leave a comment below. What do you think? And by the way, the one most important principle I talk about is the highest use of capital. That's the one. I'll try to record some other videos on that. For those of you not in my 67 Steps program, go in there. 70,000 plus people went in last year. I've gotten tens of thousands of people thanking me for sharing the stuff that my mentors taught me. It's a paid premium program. Some people are afraid to pay for information. Not me. Shoot, if somebody knows something that can help me in life, I'm happy to pay. And so this doesn't cost much. It comes out to like $2.30 a day, which is, if you're not willing to invest a few bucks in yourself, you got other issues. So, and I say that not to be mean, but I'm serious. You got to think like an investor. Investors put money out in order to get a better return in the future. So you can go, I'll put a link, or you can go to my website, click on the link for 67 Steps on tailopez.com and check that out. But yeah, leave a comment below. For you, what do you think makes the most sense for real estate and cars for you right now? And you can be honest in the comment below. Just say, I don't know, I need to talk to somebody who understands my tax situation, or you know, if you're sure you know the answer, let's get a conversation going. I do read the comments, even though I can't always respond. So anyway, have a good day.